hello. Uh-oh, I lost the chat again. All right, there we go. No, no, no. I was just trying to. Okay. No. So I had to minimize the window. When I minimized the window, I lost the chat box, and then I couldn't find it. There was like multiple windows up. I was like, oh god, where did it go? Yeah, that's all. Nope, nope. Just my era. No kidnapping. Although I don't know. I don't know. Getting kidnapped and like put in a cage for a day, not having to do anything. I don't know. Doesn't sound horrible, right? Probably not the worst thing, right? All right. Let's get everything kept. The Tasmanian devil ran through here, and yeah, don't know where anything is. That's how it works. Anyway, CPI came in exactly as we expected, right? Exactly. Uh, the core number we said potential of it going higher, and it did. It came in at 0.3. And again, we'll see what they're talking about. It's funny. The articles I talk about right now, it's like, oh, the data came in right? Higher because of because of energy, because of gas prices. And it's funny because remember, again, everybody loves CPI until it doesn't work for them. Really, on a monthly basis, it didn't go higher. Well, it did. It did. It was here, but the core number is the one that we need to be worried about, right? The core number didn't stay the same. It actually went higher, right? And again, you may say, it's just point 0.1. Well, yeah, but it was only point 0.2 before. Now it's up to point 0.3. Shows that there's an acceleration there. And then, even though you had the point 0.4 difference here, look at this, up to 3.7, right? And you may scratch your head like, how does that work? And it did this, and it's supposed to be this, but it did more. So yeah, I think people are confused about that one, and it's you know, gas prices is one of those things, and the Fed really has no control over that. So, it really comes back down to it. Is the interest rate thing helping? Is it not helping? Gas right now hasn't quite caught up yet. It's only 241 here. I know my mom was saying her station was mid 240s last week, and now this week it's in the mid. I'm sorry, not two. Wishful thinking. It was mid 340s last week, and now this week it's the mid 350s. Sam's Club here is always a little bit cheaper. Um, Typically by about 10 cents. So it's probably like half vegetable oil. So it's probably doing horrors for the cars, but it's only 10 cents. 10-cent different. It's nice. But again, energy. The scary part about this is the energy prices have just really started the surge. We haven't really seen it kind of spill over yet. More of that is coming, right? Does that change what the Fed's going to do? I mean, they're kind of, for the most part, they're in line. I mean, the expectation was there. The market had already factored that in on a monthly basis. The surprise on this one, and again, people are going to look at this and be like, I don't get it. It was up zero point 0.4 on a monthly basis. So this one should be up 0.4, but it was up 0.5. So how's that work? Right? But again, I think that the big thing to really look at is the core, but again, a lot of people don't look at the core. They don't care about the core. It's kind of like the core. What are we worried about the core for? Yeah, it is what it is. The pound had dismal data. It was expected to be negative, and it came in even more negative. And it's funny, we talked about this yesterday, and we even said, hey, all this negativity is looped in. It's looped in. It's expected to be negative, and guess what? If it's only minus zero point 0.1, we should see some positive movement out of it. And guess what? It wasn't, but there's still positive movement. The pound yen did not fall through the floor. The euro pound more or less flat, and it's kind of retracing in the last hour, and that's pound strength coming in. And even pound dollar up just as much as the euro dollar. So not too much. Although I'm sure that won't be for much longer. Yeah, well, it's kind of the same thing. Like we have a range. Like it's weird. I don't know. There's some gas stations that are like literally right there. We have a couple like I don't want to call them like bargain brands or discount brands, like but it's just kind of weird. You have like one station that's really high, and I'm like, why would anybody use that when not even half a mile down the road? There's one that's like cheaper. But yeah, we got about that same window. But Sam's Club is always about 10 cents cheaper. We're a little bit lower than what you are, right? I'm sorry, Neuro, not Will. But what's diesel? Well, that's what I really want to know. What's the diesel cost down in Will's area, right? Because diesel is the one that gets crazy. Like people just, it's you can still get it here, obviously. And you look on the board, but boat people are like, yeah, diesel prices are insane. And a lot of people with the bigger trucks are complaining that, yeah, thank God diesel's more efficient because it's definitely more expensive. It used to be that the price was based off the fuel and not the miles per gallon, but now they're like, no, 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 no. The price now it's not a miles per gallon that they're worried about. Now it's the price per gallon. And with the higher price, they're like, yeah, we go farther per gallon, but because the price is higher, it still equals out to the same price per mile, right? Not miles per gallon. it's price per mile or price per mile. I guess is what the joke is now, um, because it's definitely more expensive here. But I know Will deals with more with diesel down south. Um, Anyway, considering we had such blockbuster news, there's not a ton of movement. I think the market pretty much knew what to expect on that one. And again, I think the big thing that people don't understand is core. We'll hear more about it today. There'll be a lot, people talking about it, and there's speculation. A lot of chop in the market, so a lot of whip back and forth. There was some clear movement right ahead of time, but overall, again, I think today's data pretty much came in as expected. Again, the pound, I'm kind of surprised. I was still expecting to be less than the point 0.5. I don't know if I was expecting that much of a drop to the downside. I was kind of expecting, you know, or they're expected or maybe just within point 0.1, right? So that's a little bit more of a miss than, again, don't have a crystal ball, guys. I don't know what the data is. Most times, you know, we tend to be pretty close, right, to what expected. And it's funny, we got the data point wrong, but the movement was still the same. It's always funny how that works out. So tonight we got unemployment data and employment change data coming out of Aussie. Now, with the movement today, I think that could be a decent move tonight. We'll see what it does. Again, Australia obviously affected by what happens in China. That's a big deal for them. Um, Positive gain. Is Australia going to continue to raise? I don't think so. I think Australia is pretty much done at this point. Melissa's here today because it's a Wednesday, and Kip is just melting down. He's thrown a metal water bottle. I'm just like, oh yeah, glad he's yours today. Um, yeah, yeah. I think it's a decent. Again, all the U.S. data CPI stuff should be washed out at that point. We'll talk about it on a global spectrum. You'll see, obviously, gold moved because of it. So this will be a nice clean release tonight. So again, if you guys are around, I think 9:30. The boys I practice, I probably won't be back by 9:30, but I like this one tonight. I think this will be a nice, clean, easy one to go. Maybe like if you can get 10 pips worth of risk on that one, 30 profit on it, that could be a nice kind of like overnight based trade that you guys are looking to take. Now tomorrow we do have all kinds of data coming in. Now this is kind of today was stage one with CPI, which again, CPI is not really what the Fed is looking at. Remember, we've talked about this a million times. The core PCE data is actually what we're looking at, or what the Fed is cares about. But the markets have been so focused on what CPI is, right? That's kind of where they're stuck at. So, but tomorrow we have the PPI, we have retail sales, right? Both of those are big data, and we have unemployment claims. So there's a lot of data tomorrow at 8:30 in the morning, and it's kind of the step two, right? Step one is CPI. Tomorrow is PPI and retail sales. We'll see if people are spending. It looks like it's still positive, but it's not at the same rate that it was. Showing there's a little bit of a slowdown. And again, there's a core number as well as there's a regular retail sales. And again, the regular retail sales, right here versus the core, it's 0.7, not quite as high, but again, 0.2. So yeah, not, it's a big morning. You're not expected to raise tomorrow. Now the question is, will we get a surprise tomorrow out of the euro? I really don't know. I don't think so. We definitely had some surprises out there where people thought that they were done, and it's like, yep, there we go, that's it. I don't feel that we're going to get a European one. The data hasn't been great. We've seen like slowdowns, and still shows that markets are contracting. They've always been behind. I don't know. Maybe they're going to try to get ahead of the energy thing. I don't know. Maybe, but I don't know. I just, I don't know. I think the monetary policy statement is going to give us more than anything else. It is right at 8:15. And the problem with an 8:15 release is the U.S. data behind it is more powerful than that financing rate. But if it comes in at 4.25, I think it's weak, right? They're obviously not cutting. I don't know. Maybe I'm pretty sure we're going to hear the same statement that we're hearing from everybody else. We're not raising it right now because I know that things are working. But we will. If the data shows us that we have to, we will. Right? It's going to be that same statement. It's going to be we've decided not to change it, but doesn't mean that we're done. We could still raise it. Um, Again, that's only going to last for so much longer, right? You're not going to be able to keep using that forever. And I think we're probably approaching the end of that one. Okay. Um, yeah, probably approaching the end. All right, so that's what we got in the next 24 hours. A decent amount there. The VIX, obviously, as you'd imagine, the VIX is all over the place. Now, the data release is out, right? So we're seeing the VIX obviously pulling back down again, as it should. I mean, the volatility is, the great unknown, right? The negativity, the great unknown. Well, we know now the data's out, so the VIX should be settling back down again. We may still see a little bit of a pop if the market starts tanking because of the data, but overall, I mean, I think that data was pretty much expected. I still don't think people really know. I mean, it just if today's data technically is strong for the dollar, but if tomorrow's data is the exact opposite, I mean, again, it just it kind of folds back in on itself. All right, so it is what it is. Right now, the dollar. Okay. Obviously, you're seeing a lot of whips back and forth. We were to break through a little bit, and it did. It kind of sliced through, but you can see up, down, found the same base, and again, it's more here, right? It's all the buyers right in there, the chop back in here, and that's what it ran into, right? Again, up, down. It's not really much different. I mean, I guess before the news came in, we were at 104.75. We're at 104.65 right now, so not tons different. And again, we're being supported by buyers here. May say, why is it doing what it's doing? It's because we don't really have a definitive reason for the data was not like, oh my god, we jumped back over 5%, right? It jumped a little bit. It was point 0.1 off, but again, the Fed has said, we know energy is increasing, right? We know energy is increasing. The core number increased, but they kind of it's kind of talked about and expected. But does that mean the Fed is going to raise again? Are we going to go even more restrictive and hold it even longer? I mean, we know that it's definitely coming down. It's much better than the sevens, eights, and nines. We're talking about, getting it from the 3.5 back down to 2.5, right? I don't think we're ever going back to two. It'd be like 2.5. But question is the Fed going to raise it? I was under the assumption that we would do kind of a pause and then a raise, right? Again, this was kind of expected. They mentioned this one, and what they've said is overall, it's really the jobs market we're looking to control, and the jobs market hasn't been as strong. It's been kind of good news. So again, CPI is not the main tool that they're using. What does that do with it, right? So again, dollar's still within the same trajectory, not any type of crazy movement. You'll see it's kind of more sideways there. Indices all slightly in the green. Now, should they be green? Should they be red today? Overall, I honestly, I think the market kind of expected this. I don't think there's really, I don't think this is this is not going to be the straw that broke the camel's back and send the Dow down, 800 points or something like that today. I just don't see that. I don't think that's justified. I think there's still a lot of confusion. Like, what does this mean? What is the Fed going to do? Um, you know, again, this is not their preferred gauge. I don't think it truly tells us too much. It's a great news number. It's a great headline number. Oh my God, it's increasing. But again, the market has known that. It's that's kind of the unknown. So, you know, I think overall, I don't think the market has any reason really not to be in the green slightly. And Russell should be the most sensitive, and Russell's still up 0.7. So it's not like Russell's already dropped 5% or something like that, right? We've seen much weirder days than what we have today in the market. So overall, being down or being up just a little bit right now. And again, Russell being the strongest on data that was technically strong for the US dollar kind of goes back and shows you that I think a lot of people believe that the Fed is at a hold point now. So it's kind of where we're at. Commodities. Commodities, oil still holding up close to that 89. Technically, it's in the red right now just by a little tiny smidge, 88.72, but still obviously high. Now they're mentioning energy today, which again, probably oil doesn't like that. It doesn't like being in the forefront there of, oh my God. And I saw yesterday, excuse me, oil breaking through 89. It's a high since November of 22, right? So it's been almost a year, right? We're like almost like a 52-week high at this point for oil. That's not kind of what you want, right? A lot of people think that the economy is not great. I mean, Biden's, the polls show that both sides think that the economy is not in a great position, and Biden hasn't helped it. Um, you know, overall, that's what the polls are saying. So keeping this up here is kind of like, you don't want to be the target of reason of why things are bad. Natural gas is pulling back, but it's down, but we're still at that 270 mark, right? We're at 269. We talked about that as a bounce point yesterday. So thankfully it's down 1.8, but yeah, still a little bit high. And I don't know. What are they saying today? Is it cold? Yesterday it was hot again. Oh, here we go. Look, natural gas edges lower as demand set to weaken as temperatures ease, right? Again, one day it's hot, one day it's cold, one day it's hot, one day we keep going back and forth. Every day it's different for natural gas. It's hysterical. Gold up a smidge, 1914. Silver basically in the same exact spot. We were hovering right around that 23 mark. We knew that 23 was going to be a big deal. It's down 0.8. Again, gold just holding a little bit of a gain in there at 1913. Again, not the preferred method from the Fed. So, it's always hard to be able to like, well, should that be, where should it, I mean, it's again, wrong news release, right? Wrong news release. If this was core PCE and all those things were going, then I'd be a lot more concerned because the Fed would be like, yeah, that is our preferred, gauge of inflation, right? If it's there, if it's not there. Um, CPI is the preferred market trader, right? That's a preferred stock market. Um, so there is a difference, right? There is a difference. You gotta, realize those two things. But looking at the Aussie dollar. So again, the trade from yesterday, we talked about this one. We were sitting back in this area. Most likely it got stopped out. We were looking for some type of a Harry Potter shape. We didn't really get that clean entry that we wanted. I mean, even this wasn't the best and ended up going past our profit target. You can see this morning, it still was kind of maintaining. It went down to the level and then punched all the way through. I mean, this is a big, this candle here. And again, bodies here to here. Talk about a whipsaw, right? That's 43 pips. It's got a daily ATR of 61. So, I mean, top to bottom, pinch all the way down to back up again is 51 pips. So still not a daily ATR. But again, the whipsaw back and forth, what direction is it? Is it strong? Is it weak? Market has no idea. Market can't figure it out, right? Because again, not necessarily the preferred method. It's kind of, I guess, a proxy for that method. It's what the overall stock market looks at. But again, the currency market really doesn't care about that. So, saw massive dollar strength, but then I don't want to say massive, but powerful down and then bottom out. And then boom, now we're seeing all this dollar weakness, right? How are you seeing dollar weakness? Well, it's a play on emotions. A lot of play on emotions on this one. So that trades out from yesterday. We're going to take this guy out. We know we still got levels down south. This Harry Potter, we don't need anymore. Again, that level's been kind of chopped through at this point. Nothing clear at the top. Got to break through this area. It's about 10 pips. Almost about an hour. There we go. I'm wondering if we're gonna have a hard. How much we got? Got a 21 pip 4 hour ATR. It would need 8 hours. We have 12. Excuse me. We have 12. So, I think we're too close. And again, not as well of a defined zone here, right? Um, Overall, I'm kind of okay. What's the expectation? Yeah, the expectation is pretty good and it's going to hold. Kind of looking for like an Aussie short tonight, but I don't know. It's 10 pips here. We just measured off. We know it's 10 pips from the top of the body or down here. Hold on. Yeah. Kind of from where the testing is coming in. We're kind of in close proximity to it now. I mean, it needs to go about 20 pips, but we got 12 hours to go. So the real question is, will we bounce back and forth? Will the sellers here extend this out a little bit, and then will we have the ability to run up higher? Um, as of right now, I do kind of like it more for a short tonight based off of what the expectations are. Um, but we're sitting in the middle of the range. We're literally kind of at the 50% mark between the two zones we have marked out with confirmation. So I'm wondering if that's going to be an artificial surge. And again, maybe we come up to here at 12 and then roll back down again, and then we look to take it long tonight. But I think that's the next closest zone. And right now, I'm not sold that it's an automatic kind of like, hey, listen, you need to get in right there. But I think that has the potential. It is 10 pips. I do like 30 in the other direction. That is half of a daily ATR. So it does seem kind of high on the percentage basis, but again, I think it's a pretty decent trade setup. Also yen. So there's also yen. We ended up tagging this one last night at 9 o'clock. We talked about 94.64. You can see this was an easy 10 for 30. It is officially out. Um, it got you out. It looks like it reversed right here at 11:30, and got you officially out at 2 o'clock in the morning. So trade is out. We're running into it right now. The question is, do we take it? I actually don't think it's a horrible trade to take. It has been hit once, so understand the second time is always going to be a weaker hit. Um, but this was off the level from yesterday. We talked about 94.64. So trades out. Again, we've just had a big surge in price. We tend to see reversals in price after these big surges in news. The news is out. The 9:30 candle is there. We're approaching 10 o'clock. If we can hold and maintain, this tends to be where it turns and reverses, as well as that kind of goes with what we're seeing with the Aussie. We're running into sellers. We should kind of probably see this turn and flip. So they're both kind of in the same area where we should see turns and flips back in a downward direction. Okay. So again, it's just a repeat trade. But again, if you took this one in the overnight, you made 30 on it already. I think it's kind of set for another pushback to the downside. Okay. Euro dollar. Look at the whip in this one. Now, I don't know if you can see this or not, but we talked about a level up top. Yesterday, about 4:30, we hit it, and then again late last night we hit it, and it pushed down. Had you just run this straight across, right, you can see that that's kind of where what we were looking for. Yesterday morning, we were standing, or Tuesday at 10:30. We were sitting over here, right? If you extend the zone across, again, it hit it again, went much lower, came back up, and didn't really, you didn't get stopped out of the trade. Again, we knew we were high. We knew 107.60 was an area. So, again, kind of a completion of that trade. You're seeing now the dollar strength starting to roll back in this one. I actually think this is a little bit more European weakness than it is dollar strength, but to each his own. It went back and ended up grabbing. It's funny. Target-wise, we had marked this level off yesterday saying, listen, it's got to get through this level right here. Oh, whoops. I don't know why that button is not working. And that's what we bounced off of. 9, 10 o'clock yesterday morning. We were sitting right here at 10:30. We got the red, green, and then the red obviously closed above. I'm sorry, the green closed above. That's exactly what it ran into. So that would have been your downside target in this play. Kind of almost went the whole channel up and down all in the same candle. So yeah, I would say the same. It's kind of the same as yesterday. Had you taken it again, I mean, again, yesterday morning's trade from Monday down was out yesterday. And then again, we ended up hitting that level and using it one more time. So it's there, I would say right now, because we have this clear. I think we're probably good till probably down here. Still down there, the 107-ish level. I think it probably continues to deteriorate as people are looking at that number. And again, I don't feel that Fed's going to be like, hey, listen, that CPI data, woof, that CPI data was hot. Again, it's not something that the Fed talks about. They'll acknowledge it, but it's not the preferred method, and they'll be very, very clear about mentioning that it's not the preferred method. Because I truly don't believe that it is. But as I said, it is a retail trader, stock market, CNBC. They love the CPI number to show you what inflation really is. I don't know if it's just because the core PCE number is too confusing for people or what. But anyway, I looked for this to deteriorate down again. If we stabilize here at 107.13, it's been here. It's went deep. I think we're probably not looking for long until we get a little bit lower at 106.95-ish. But again, that's us playing with that 107 magical number down there. So right now, look for it to deteriorate down. Dollar strength should kind of roll back into the market. But again, multiple opportunities to take this trade that we saw yesterday. Euro pound continuing to push. Now, funny, early morning we had a surge up again, and then when that data came out, right, that data this morning came out at 2 o'clock, and magically, we always talk about an hour and a half beforehand. Well, at 1:30 we pushed up, and they were holding at 2 o'clock, and then what happened? Really crappy data came in. Look at that. GDP went down twice as much, over twice as much as expected. Yet euro pound went down. Why? The market jacked this thing higher. Well, I guess actually the 2 o'clock drove it up, and again, the parabolic move with the retrace. Again, retail traders trying to take advantage of that one, and now we're lower than what the news originally was, and it's pushing down. So, as far as this one goes, we can extend this up a little bit if you want. You can see the 23 kind of came down based and just collapsed right through that 86.02. We'll remove this now. The top of this I do like. I did want to point this out. Again, I love when there's 3 wicks at the top, particularly when you have high, lower, lower, that kind of sawtooth effect. I'll do this one just to make it easy. I think we need that. Yeah, there's 9. Kind of something along those lines. I think that's a decent area. Let's mark this off just so you guys can be aware of it when it comes up there again. And again, not everybody trades this one. You can use it as a proxy. It has a daily ATR of 38 pips. So we're not cruising, 90 pips a day out of this one. with it pulling back down, there is a little bit of buying down here right around the 50. You can see there was a little bit of a test, but it kind of launched itself, as well as the 618. So there's two levels. The 50 is only sitting about 14 pips away. So you're not going to trade it down to that level. Just be aware that that's, if you are short, probably a good profit target. Now the 618 is about 27 pips. So it's about 8 hours, almost an entire day worth of movement away. It was a decent bottom. I would prefer that the red candle in here was the low, not the green. But now that the price has rallied all the way back up again, everybody and the brother knows that this is a 618 level now. So they're going to be looking for something in this level. That could be a potential area where it becomes a profit first, and then if you're looking to reverse off of it, we'll turn it green as maybe a potential long area. But I would say right now those are kind of our tops and bottoms inside of the euro pound. And understand, again, not the hugest mover, right? Not the largest mover in the world, but yeah, not the biggest mover in the world. That's all I'm going to say. As it pushes back to the downside. So kind of sitting in the middle, probably a little bit of buying here. The 50 maybe something. I think 56. 85, 65. And then again, 86, 21. Kind of our tops and bottoms. All right. Euro yen. So euro yen. We talked about two levels, and we had the conversation yesterday about the aggressive and conservative. If I extend these across, you can see that the aggressive level, the 85, the 158.61, it got tagged at 9 o'clock last night and pushed all the way back down again. And then came back up and it touched it and it's kind of pushed it back down again. We'll just hit the original one. And again, I mentioned this yesterday. 13 pips, 14 pips, whatever you want to take it for. 13. 1 to 3 is sitting right there. Right. You can see how quick it was out. Right. A few hours. You were out at 2 o'clock in the morning. Sometimes the aggressives are the way to go. Sometimes the conservatives are the way to go. It really depends. And again, we knew that the 61.8 level was up there and we knew it was a pretty decent push off of it. It hadn't been touched yet. So, to each his own. Some people like pure conservative. They love the extremes. That extreme was up at 158.88. This is another level which was decent. Strong push off of it, just a little bit outside of that 61.8. And you can see it actually went up and touched that level. The 61.8 was a little bit lower. Didn't even really slow down. So sometimes you need that. But again, another one of those overnight ones. And again, if you took aggressive or conservative, remember, aggressive will get you into more trades, right? But by being in more trades, you will, lose more often because you're again, there's a higher level of risk when you try to go with the aggressive entries. But again, all trading is based off of risk, right? If you're focusing on the 1 to 3, you guys understand what percentage you need to be correct in the market, right? And just know, it goes both ways. Losing on an aggressive trade, there's a psychological effect, but winning or not getting a winner because you were too conservative also has an effect, right? There's psychological aspects of it on both sides, right? Which a lot of people got to get. It's kind of like a stop loss, right? A stop loss is great when it actually helps you, but when a stop loss gets you taken out and then it goes where you want, yeah, it did its job, right? It did its job. But then you're like, oh man, but I missed that trade if I didn't go on there. Yeah, but you know what? If it didn't just spike, if it went another 100 pips higher, there's your account. It's gone, right? Um, so again, you're pissed at it when it works correctly, but then goes where you want. But you're not thankful when it saves you from losing your account, right? Remember, stop losses are to present catastrophic failure. That's what their job is, right? Catastrophic failure. But yet, people are concerned. Oh man, it costs me money. No, no. So yeah, again, continuing to push back down. I think at this point, I'm okay with the. Again, we did go higher. This one has actually been punched through. It went all the way. We're looking for a little bit more. Again, the Harry Potter, you guys can see, we did get the pullback. It didn't come back and touch it, so not ideal. Again, we were looking for the pullback in. Looks like 1 o'clock it based, and it did pull back. It just pulled back here. And yeah, get the squealing again. I was like, how do you get anything done? I'm like, I don't. There you go. So yeah, I think I think right now look for the 157. We're looking for the pullback on it. It's the base. It's now a 50% retracement level. So I think look for that one to kind of peel its way through. And again, we'll just put this there so you can see it. I still think it's a decent level. It's a base right at 50. We should get some help with it. So yeah, leave it there. Pound dollar. All right, so pound dollar. So we were looking for this to push up, right? We were talking about going all the way up the 125 and push. Well, it didn't, right? We got the strong push down, right? We're looking for some good pound data, and it didn't. It was dismal, but it went straight down into a level, and then we rallied back up again. And then the data came out, and we had a little spike, and now it's pushing back down. And I think this one does push back down, and just it's here, right? And it's here, and it started here. So the only thing we got wrong of the three different arrows, we looked for it to push up, and it did. It kind of went up. We were looking for it to go up here and continue to go higher. It only went to here and then shot down. So we were looking for there and up, right? We were looking for up, up, up. It took a big hit. I didn't expect that much of a big hit. I didn't think the pound data was going to be that bad. I didn't expect good, but I didn't expect that bad. So again, 2 out of 3 hours were the right direction. Just the base of them was off just a little bit, and I do see this pound dollar continuing to push back down again. It's interesting it used this blue level, and again, this is at 3 o'clock in the morning. This blue level was drawn yesterday, but you can see it based in there. So it looks like we're probably going to shooting for 125.55. Right, 124.55 is really kind of where we're looking for a target, and look for some basing. And I think this is probably a decent level. Again, there'll be profit taking coming in. Again, I don't think the pound is, everybody knew the pound had problems. It's not a big surprise. And again, the market had already factored that into the price. But at the same time, is the U.S. in a great scenario? Not really. I mean, we know we have contraction. We know we have, energy prices going higher. We know inflation is increasing, and the cure for, inflation is raise interest rates. I don't know. I don't feel that the market will be very excited about raising interest rates. And again, I know the housing market's not happy. I saw that. I don't know what it is now, but I do know that, the Yahoo articles I got said that it was like, this is like the third week in a row that it's above 7%. Like, God, who wants to buy? Remember when mortgage rates were like 2.8? Who the heck wants to buy one for 7 when it's, they used to be 2? We can remember, right? Not even our lifetime, within the last couple of years, 2.8, right? So, yeah. Although I don't think housing is criminal. I think the auto market is even more criminal because, like, inflation. It's everything's more expensive. It's like, really, we saw inflation come down a lot, but like the average price of a car now is like 60,000 or something like that. It's like insane how high it's gotten, right? I think that market's more criminal than any other market. I'm kind of hoping. I don't know. I don't know if they did or not, but there's a big strike potentially coming with the UAW. I guess they wanted some terms that were just astronomically wrong. And again, part of it's because inflation is so high. Um, you know, I don't know what's happening with that yet, but I think this week, next week, something like that is when technically they could go on strike. And I know a lot of car companies jacked up production with the anticipation that it was going to happen. So we'll see. We'll see. But yeah, look for this to roll back down again. Pound in. Wow, look at that. Big push down, parabolic move, all the way back up again. We're sitting back at that 18, 184.25-ish. Question is, will we see a reversal from here? I think you got to take this one with a grain of salt. It was a basing level. You can see we just missed the buy smidge last night at 9 o'clock. And then it came back up and it, again, failure to go higher. And it's like, oh, crap. There we go. Started the push back down again. It's like, man, it's kind of set. And again, dismal data. Big, strong push to the downside. Not even really much of a pause. 80 pips instantaneously. Boom. And what did it do? I'm going to remove this arrow or remove this dotted line so you can see it a little bit more clearly. What did it run into? Well, we always talk about profit taking where the spike was. And there we go. And again, let's not cheat on this one. I missed it by 0.6. I'm pretty good at that, though, right? Right there. And is that in the correct spot? It actually could go a little bit higher. Technically, it's a fat line, and it's actually going through the red instead of being on top of the red body. But you can see it touches it either way. It doesn't matter if I raise it 2 pips, it's going to still be touching it. So you guys can see it actually pushed to with the news exactly where it should have. It found the base here with the pop. That's exactly where your profit target should be. And again, parabolic move, renew an area of buyers on the opposite side, and we pushed all the way back up again. So would not actually be surprised if this one turns and rolls and flips back to the downside right now. Okay. Now we have a green candle. I'm sorry, we have the green. We have the red. We're kind of waiting to see what happens. If we get a red, a green, and then red, we have a confirmation. We should push all the way back down as well. But right now, we're running into those sellers. Again, 10-10. We're at the reversal time. Strong parabolic move, strong parabolic retracement. Profit taking in an area of sellers, this is where it happens, right? This is where it happens. So we should see this turn and kind of push back to the downside. So yeah, hmm, not a bad one. Not a bad one. And again, it's just a continuation of this. You can see it hasn't hit it yet. It just hit it a little while ago. So unfortunately, it's a shame it didn't hit it here late last night because that was a nice push down. You can see it went well past it. Again, it was like 1 to 1.5, 1 to 1.25, and then boom, all the way down. So gorgeous level. Just missed it by just a smidge. And again, we use the top of the bodies here and just missed it by a smidge. I don't even know. Well, tell me how much. Mm, Point 0.4. We missed it by point 0.4. Yeah, point 0.4. So very, very close. Very just pipettes, right? Pipettes. Gotta love them. Everybody loves pipettes. So yeah, fun, fun. Dollar CAD. So dollar CAD more or less flat. So yesterday again we talked about that. You can see Monday kind of came down and then we just held nothing, 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 nothing all last night. Nothing, nothing, nothing. Late last night at 9 o'clock when everything else moved, nothing really. European session, we kind of got a little bit of a pop and then kind of a push back down and nothing, nothing, nothing. Kind of pushed it up and then kind of the pull back down again. And what did it do? It went up and grabbed that same level again and then continued to go lower. But we're back in the same kind of doldrums right down here, right around the 135.60. So a little bit of movement. If you were looking to take something again, that was your most recent confirmed level up there. It had been hit a few times, so again, a little bit more dangerous. But it was a 10 for 30. Again, nice little 10 for 30 drop to the downside. Again, dollar CAD has been so challenging, and you know the problem with dollar CAD, again, this is historically, you got that oil component in there. Again, they refine a lot of oil. It's a big thing for them. It kind of drives their economy, and yeah, um, seeing it where it is right now, it's not lost on Canada, right? It does affect their economy a little bit, but remember, they are, you know, they produce crude, they ship it to the United States, we refine it, we send it back to them at like twice the price. Um, but yeah, they're still getting twice the money for it on the way in, so that actually helps their companies. So we'll see. But again, not really a lot of trending. Um, as far as where I'd look to take this next trade, it looks like again we got a kind of a hard bottom down here. 23 doesn't do much for me in there, and even right now the 50 doesn't line up. The 61 is a small zone, so there's really not a lot until we get down. So you know, I think the dollar strength will roll back in as people are looking at this and being like, maybe the rating's on the wall, right? That core number, it's like, yeah, right. As far as a great level in this one, I still think it needs to come lower before I'm interested in much. Again, this level, multiple hits, and then a get hit again here. Am I interested in taking this one? Not really, right? Been there a few too many times at this point, so yeah, not my favorite. Dollar Swiss. Look at the chop in this one, and again, here was the trade from yesterday. 9:30. We had mentioned this one, and again, we were out at about 12 o'clock yesterday. I said if you needed one, there's one in there. And then we just flatlined. Once we hit 12, we just flatlined and started the rally back up again. And we kind of missed the next entry in here. And then look at the chop in this one. I mean, this just shows you the indecision in the market. That one candle is 40 pips. It's only got a 54 pip daily ATR. And literally the open and close price of this one, 3.2 pips, right? The spread's 1.6. So it was double the spread. 3.2 pips was the open and close. Spike all the way up, spike all the way down. Again, a lot of indecision. There's no way to read this one. They don't have any idea what's going on. And again, even with all the chop in here, it just got really, really ugly really, really quickly. And again, you typically want to make sure that you stay away from ugly trade setups. And this was definitely one of them. This was not the nicest setup in the world. It just, you know, what are you gonna do, right? What are you gonna do? So, yeah. Dollar yen. So dollar yen also we mentioned being challenging, and look when I remove this, look at that candle, right? We marked off the level, said 147.70, and guess what? It touched 147.70. This one kind of had the same thing, top to bottom. This dollar yen candle was 63 pips, right? Opening close price though, 5.5, right? 5.5, right? A lot of indecision up and down, and I think if we run this on a 5, you can kind of see it. Yeah, even on a 5-minute candle. God, can we do it on one 1 minute? Yeah. Look at the 1 minute candle. It's exactly the same. Look at the 1 minute candle. Again, the open and close price. Oh, this one's 10. 10. So a little bit more here because it immediately pulled back. But the same thing. Same candle, top to bottom, right? 61 pips. Top to bottom bounce between those two levels. It's funny that thing does. It looks the same on all of the charts, right? It looks the same. So, yeah. We're basically where we were before the news. We're really not much different right now. So, great trade setup. It's 10 pips away. No, not really. People don't know how to trade it, right? We haven't gotten a good confirmation up top. We used it. There were sellers there. We said there were sellers there, right? Because we saw this is where the gap was. And actually, I guess I could have probably put it there and actually marked the gap off correctly. It doesn't matter. It ended up hitting it. It ended up going past it right there. The bottom of this is 74. 74.4 and it came to 74.6. So it did actually hit it and go above. So yeah, I think at this point, look for it to go up to that level again. Again, there was obviously sellers that stepped in. Look for that to be a next area of shorting. Maybe we turn and switch this one here. I would actually, if we can push up into that level, I actually think that's probably not a bad level for tomorrow. And again, we know we have all of our retail sales and our PPI data. I mean, they're both great things, and the forecast is pretty crappy. I mean, the forecast for retail sales is down 0.5%. That's not good. And PPI expected to be up a little bit, right? And again, maybe the PPI stays at 0.3. I don't know. Maybe it goes to 0.5. But if retail sale, again, one of these numbers is really crappy, and one of these numbers shows that inflation is increasing. So the picture paints is not great, right? Yeah, neither one of these is. Whoop, um, I'd kind of like to get this one short tomorrow. I think this is again with us rallying higher. I think I'm okay with a short trade tomorrow. So yeah, again, if you want to use this 147.73 ish level, this kind of gap level, it's kind of where we're looking for today. And you can see the whip back and forth. Had you been in it, doesn't matter if it went down first and up or up and down. You can see both times came right back down and grabbed the same level. So again, the 1 to 3 was obviously in here. I mean, I'll draw it just so you guys can see the distance that it had to travel. It wasn't really that far. You don't have to bring it over here. 1 to 3 was right there. Oop. 1 to 3.02. So you can see, had you gone in, it's very, very fast. Came up, grabbed it, and went. Okay. And the reason why it's not showing is because it was up and down all the way through, so it doesn't track it as issues tracking that. But even if it went down first and then came up, the price went lower in this red candle. So you were good either way. Or if it went up and then down in the same candle, you're in and out of the same candle. Right. But even on a 1 minute, you can see it just whip back and forth. It was meant to stop people out in both directions. So it did its job. I mean, whenever you have this, people are like, oh, if it breaks down, I'm selling. Right? If it goes below here, I'm going to sell. If it goes above here, I'm buying. And you can see it whipped in both directions. It probably cost some people some money. They were like, oh my God, I was up big and then I was down big. What happened? What just happened? Again, it's not indecision. Looking at crude. So crude pulling back a little bit right now. We're down 0.07, but understand we were at 89.66. So yeah, it's great that we're down here. I think that's awesome. But from where we were yesterday, we were sitting here talking about, oh God, we're playing with 89. If we get through 89, 90 could be up there. And what do? We put a new high in at 89.37, pulled back and found an area of buyers. And next surge went up to 89.65. We're pulling back down and we're trying to find buyers now. And there's an area sitting right here. Look at this. 1, 2, and 3 in a row. Box that off. We ran into. So it pulled back a little deeper to get those buyers. But if it starts building momentum again, crap, are we going to hit 90 today? I mean, got a couple days left, but I think you got to keep 90 on the radar. I mean, I think 90 is on the radar. Don't like it, not happy about it. But I mean, as far as the technical pattern goes, if you want to talk about kind of how things are moving, yes, we broke it a little bit today, but we had some big data came out, right? So some big data came out and we just found some buyers. So if we go back into that channel, it takes a little time to get in that channel. God, that 90 mark is right here. I mean, it's sitting right there. It's all it's got to go to, right? Yeah, not loving that one. So yeah, crude oil, wouldn't be surprised if we end up in a green today. If we start to rally back up in here, we will be in the green. Now, natural gas. Yeah, natural gas had a big surge. We were looking for a Harry Potter trade. We talked yesterday about again, yesterday we were sitting right here, right? We were looking for 275. It came up and it started to play up here and gave us a new top and came back up and grabbed it. There was a little bit of a position right here. Unfortunately, we were looking for a punch through and a pullback. It didn't. It just went all the way and tagged our profit target, which sucks. You know, you got to hate when that happens. You're like, oh, no, there's a trade. Yeah, break it, pull back, use it, and go. It's just like, nope, we're going all the way to we're going to go 278. And I think that's where it capped out at. Yeah. Or 277 is where the cap was for the day. This was yesterday, the 278. You know, thankfully, when you look at the 52-week range, we're talking about 194 to $9.11. We are definitely in the bottom third of this one. So it's cheap. You know, it's cheap now compared to what it used to be, but it's still not, it's not 190, right? It's not 190. 190 is much more sexy. But we called for it to go higher. We're looking for the pullback and go, and now it pushed. And again, it's kind of using that old level. The old sellers here are now the old buyers on this side. Again, does it go a little bit higher? Probably, but it's funny. It's like natural gas edges lower as demand is set to weaken. And then since that news came out an hour ago, right? 30-minute candles, there you go. It's up, right? It's up. So I guess they wrote that article when it dropped and then sent the article out. And then everybody's like, yeah, sell. And that's why it's gone higher. But it is what it is. Again, I still think natural gas is poised. It's fighting with everything it has right now to stay high. I do think, again, the temperatures are easing. We should see this turn and start to roll back down again. And again, maybe we stabilize just in the 260s. I'd like to get it lower, but 260s may be where it's at. Gold creeping a little higher. I'll remove this. You guys can see the volatility associated with gold. Look at that. Yesterday we talked about 1906, right? We talked about buys in 19625. We were looking for kind of a base. Unfortunately, it was a quick strike down. Again, if you take like a standard zone, if this is your standard zone that we're looking for, and just move this over here and put it at the 1906, you can see it maintained and held and went back up. Right now, we're really exactly, if you look to see where the 930 candle is, the 930 candle opened right, that's 8. Wait, hold on. That's 830. Yeah. That's where we opened right before the news came out. We're sitting at the same level. So it hasn't really moved much. Again, people don't know how to read this number. They can't have an opinion about this number. Is the Fed going to raise interest rates again? Holy crap, right? I think a lot of it's going to depend on retail sales tomorrow. Again, CPI is not their jam. It's the stock market. But they're looking at this and saying, okay, well, the core PCE and there's PCE. What's going to happen with retail sales? Because if retail sales is good, what does retail sales being good do, right? What is it going to mean? Is the Fed going to be like, we haven't crushed the economy, we're raising? Or, holy crap, retail sales is bad. We can't do anymore. We're just going to have to let this roll and see how it works, right? Right now, the Fed doesn't have any control. The only thing that can happen right now that really kind of messes around with this one is if we increase supply of oil, right? Will Biden go back to that playbook and release more oil from the Strategic Oil Reserve? Remember, we've released oil, right? We're kind of at like a 52-week high, and this is important for everybody to know too. Oil, 52-week high is 93. The low technically is 63, right? So we're more or less at the upper range of that like $30 bracket. Remember, right? We use the Strategic Oil Reserve. They stopped it, and now they're starting to try to refill it. But refilling it, are we at the high range or the low range? Kind of the high range. So again, not one of those good economic deals, right? And again, don't think that it's lost on Russia or Saudi Arabia that we're, again, required over time to refill the Strategic Oil Reserve. That's why it exists, right? Don't think that Russia wasn't extra motivated, right, to make sure that we refilled it at a loss for them, right? We're trying to hurt them so they don't make profits. Well, guess what? They also are trying to stick it to us. So, yeah. Don't think that didn't weigh in on their belief to cut, right? We're gonna maintain cuts till December. Yeah, they're not dumb. December was strategically picked, just so you guys know. Right? It's been documented, quoted, strategically picked. So yeah, we got those two. As far as, and again, that's where gold is. I think gold continues to push lower. We talked about this before, going back down, being closer to that 1905, 1900 mark. I think 1900 is going to be a big deal. I don't actually think we can get much lower than 1900. I think that will probably be the bottom base. I think we're on the bottom end of the range here. I don't think gold's going back down to 1500. Doesn't matter what's happened. I do think we will have entrenched inflation. I don't think it's going to be the boom thing. I don't think we're going to 3000 anytime soon. But I do think that this is kind of a hover spot. I think it belongs down here. So as far as trading it today, again, I would say more negative in it. I would kind of like, I don't know, maybe we can get a push back up to the 1919. I do like the 1919 short. Even though this has gone just a little bit lower, I'm not as concerned because now with the pushing down, you can see the 61.8 is now playing with that last zone with the big push. So I'm good with that one. Silver is just a mess. Look at this. We knew that 23 was going to be one of those areas, and it did. It kind of came down. We have this 8 o'clock came down. The green, technically the 8:30 was green up and down. And what did it do? It went up and used the 23 level. It didn't quite, it looks like it just missed the basing above 23, but we know 23 has its own problems. It's back down at 22.84. You can see we've made an attempt and we're starting to build back down. And there's buyers here, but can we go down to 22.75? Probably. I think 23. Honestly, I think 22.50 is more the bottoms for silver for me in my eyes. I know it can go lower than that. The 52-week range is down to $18. It broke through 18 at 17.97. I don't think it really gets below 20 again. I think that's kind of entrenched at this point. Just the natural stage of inflation. I think 20 would be really difficult to break. But I think, again, anytime we get close to 22 or 23, it's going to be a big deal. I think for right now, until we get really any definitive views, I think 22.50 is probably a bottom in silver. All right. So that's kind of where we're at. As far as opening print goes, today is a horrible day to do an opening print, just so you guys know. Again, something like a CPI when inflation is the number one driver in the economy right now, it is not the best. VIX kind of ticking up a little bit, not much, right? Dollar trying to inflate, but again, from where we are, we're exactly where the dollar was before the news came out, right? Whipping in both directions. So ES, here we go with ES, and you can see the big spike in this one was at 8:30, right? We came all the way down and spiked back up, came up, and there's a level there. There's nothing confirmed in the overnight. So even for a reversal, here's your 9:30. If you look, there's a level, but again, too much whip back and forth. And what did it do? Right now, the price is basically where we were, just a little bit off from where the news came out. Again, people are not sure how to take this. It's basically flat. We're at 0.02 up. If this turns and rolls negative a little bit, not surprised, but I don't think today's data is enough for the market to really go crazy one way or the other. I think people are looking at this and going, okay, well, we got retail sales tomorrow. If people are still selling stuff, then again, that should be good for us, right? If people are selling stuff. And again, that PPI number, I think tomorrow will be a bigger mover. It gives us 2 days worth of data versus giving us half the picture with the other half coming in tomorrow. Remember, they're all three big releases. CPI was the first one to drop, and then bam, retail sales. Are people still spending money? And number two, the PPI data, purchasing managers, or the I forget what it stands for now. I'm drawing a blank on it. Where is it? The producer. I couldn't think of producer. I was like, I know it's price index, but crap, it's not product. Yeah, the producer's price index. See what happens when I have one cup of coffee? I'm like, oh my god, I know exactly what it is, but I can't. The word will not come. Overall, yes, you can see basically flat. No major movement in that one. People don't know what to do. They're confused. NQ, same thing. Look at this big spike down. Everyone's like, oh, heck yeah. Short this one. This is horrible. And then what does it do? It goes up and everyone's like, okay, maybe it's good. It's good. It's good. And everybody buys it here, right? Opens good. Oh my God, buy it, buy it, buy it. Never mind. All the way back down again. And then we're kind of right in the same spot. So, opening print trade here at 9:30. No, I mean, kind of a confirmed zone, but you expect the top of this one to go through. You're looking for kind of a trap as it breaks through the top side of that one. It already got chopped in both directions. Again, not really the best, kind of piece for the morning. YM, look at this one. Even more drama. Look at the 9:30. Hey, if it breaks over the Globex high, and again, trap. There's your Globex high. We're sitting already on the high side. What does it do? It goes through and it spikes up and then comes back down again. Look at this. The open and close were literally on top of each other, right? A little bit up, smash back down again. Again, we're starting to consolidate in. People are like, what do we do with this? Right? Now, tomorrow retail sales will affect YM more. So YM is the only one technically in the red. ES will be there probably soon if it continues to be a little bit, more negative. Retail sales tomorrow does affect YM. So 8:30 tomorrow, I expect YM will be the indices setup. I would say that that's the futures trade for tomorrow morning. We'll see where this one goes. Right now, I'm not interested in using this because it's a whip, and I'm not interested in using this in analysis. It's just too much. So we kind of need to grind down or grind through either of these two levels to get something clear. But anybody that's trading futures contracts will be probably decent trades. Now, remember, if you're doing things funded too, make sure you check. Now, again, a lot of the funded companies have gotten rid of the whole news trading, you know, snafu, but some of them have certain releases. I do think I have to double check because there's a bunch of them. It's hard to keep up with all of them. I know, like some small things, they don't. It's not a big deal. But like CPI, I think is one of them. Retail sales, retail sales may be one of them, but a combination of retail sales, PPI, right on top of each other. Again, just be cautious if you guys are trading funded tomorrow with that kind of double big release. I mean, retail sales used to be like a top 3 or 4 trade. PPI not so much, but now because again, it's kind of linked with a lot of other things, right? Um, when purchasers, it costs more for purchasers to buy things and build things, they pass it to us. So there's inflation there. So, and it is supposed to go up. So watch that one tomorrow morning. But I think tomorrow morning is going to be a decent trade setup. So, but I think YM, if you're going to play at futures contracts tomorrow, YM I think is how you play tomorrow. Because again, retail sales, are they spending? Are they not? Again, industrial, right? Production, manufacturing, all gets wrapped into there, right? If we're buying, manufacturing's got to make sure that they are producing. If we ain't buying, manufacturing not looking good, right? So retail sales will affect the YM the most typically of all of them. Okay, and then the Russell was the only crazy one in here. And funny, Russell is the only one. It's the only one that's actually a decent mover up, 0.7. And again, part of that is because obviously we had the contract switch that was here, and we talked about it's going to pop higher. But the reality is, here's your 930 open right here. What has it done since the open? It's gone straight down. So it's a misleading number. And again, this is why futures are dumb, in my opinion. Whenever you see these contract switches, and yes, there's different contracts I can use, but these tend to be the ones that we're using the most tradable. And it'll tell you which one it is. It's the RTY. What is it? RTY Z 2023, right? Is the current one that's being traded. So again, this is why the analysis gets screwed up, and it typically takes a few days, just like these guys did, right? And you saw the jump here on the contract switch, and now we have data that we can use. So it takes a little while to catch up. So not really positive. It's just the contract switch. So it is what it is. But again, I care more. I don't really care about what these numbers are. I care about what happened since the open. Had you bought this at the open, it doesn't matter what you did the day before, right? Your trajectory has been down, and it's trying to retrace back up again and trying to get up higher. Overall, I think the Russell of all of them, although it looks like it's the strongest right now, I think this is the one that has the biggest concerns. Right? Biggest concerns with retail sales. Because again, if people aren't spending, it's going to hurt small business more than big business. All right. So that's it. Again, tomorrow, very important morning. PPI, retail sales, both big things. Unemployment claims, we'll see. I don't know. I'm not turning unemployment claims into a red number yet. I would still leave this one orange personally for me. But again, I think we have short euro going into the morning. We'll see. Core PPI expected to go down, maybe not, but core retail sales expected to go down also, but still positive. PPI, funny, the core number going down. I think that's the one that we have the chance to miss. The PPI overall expected to go up slightly. Then retail sales on a monthly basis supposed to go down, but the core also expected to go down. So I think this retail sales number right here, this 0.2, is going to be a big telltale sign. God forbid it goes negative. People pulling back. Woo, woo. I think markets will have a rough day. So, all right, with that, let's go ahead and do our drawing. We got 4 in. Will, I swear to God, you typed ticket. I saw you type ticket earlier. Oh, you didn't put a space in there, Will. You got to put a space in there, Will. Jeez. I know you're just playing with my emotions. See what Will does? He's like, yeah, I'm going to pretend that I put a ticket in. But he forgot a space. He forgot a space. All right, I will give you the 30 seconds, Will. I will give you the 4. Right? Once it says 4 minutes, that's it. Got to shut it down. You can't dial it in and then roll, right? Again, you guys can check in the chat, right? You guys got to do the exclamation point ticket, space, and a number. And he did not do the space. He just typed the number right afterwards. He's so used to doing 1, it's throwing him off because we'll try to do 2. Right? We'll try to do 2. That's what it is. He's like, I don't know how to enter 2 tickets. It's not my thing. So see what's happening. I'm trying to be nice because he did punch it in there, but he just doesn't know how to do it. Right? I'm gonna have to close it down at 4:30. Will, I gave you this is user error. User error. Here we go. It's gonna be 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. can't hold it anymore. There we go. I'm sorry, Will. Is it Will one of the founders? Will is one of them. Yeah. Well, not founders, but Will's been with me from the very beginning. Yeah. Yeah. Yep. Yep. Will was one of the originals. He's one of the OGs. I think Will actually has the longest subscription. It's either Will or Debbie. I think it's the longest subscription, like 49 months or something like that. So 4 years, 4 years since we've been using this format. So yeah. All right, here we take all his pip chips away. Yeah, yeah. He didn't enter the trade, so we're gonna penalize him all his pip chips. No. All right, here we go. Winner of today's drawing is Debbie. I didn't say her name. I did not say her name. Didn't say it. And again, Ernest has this method right now. Bam, Debbie just busted him. Just like that. I didn't say anybody's name. Although I was thinking, I'm like, it doesn't matter that I'm gonna cut Will out. One of the girls is gonna win today. I just had a feeling that the girls were gonna win today. I don't know why. So, all right. Let's go to leaderboard. Let's give Debbie 25. I didn't say Debbie. Didn't say it. Didn't say a word. I said will. So I'm just telling you. Just telling you. All right. With that, again, be careful tomorrow morning. With that, I will catch you guys tomorrow morning, 9:30 Eastern time, right after the release. Good luck, good trading, and I'll see you guys then. Take care.